Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Monday, October 8th. And what we're going to do tonight is just follow through what we talked about in the weekend update, which was the market's probably going to pull back here, led by the NASDAQ. And sure enough, we saw that follow through today on the NASDAQ. And we're seeing right now a lower high. So the relative underperformance in the NASDAQ is something new. Well, it's something new because Apple and Google, they've been, outperforming to the upside. Those are the names that you've wanted to be long, and now all of a sudden that's not the case. And if you look at Apple rolling over, hitting a low today, let's see what the low today was. 636.11. I did actually buy a little bit of Apple at 637, ended up getting stopped out at break even. I was looking for a potential gap close. Didn't happen. My thesis was buying off the value area low here the value area high. And looking back at last month, we did have, and I have the fib numbers, bear with me. All right, we did have a nice little volume area here. You did see a little bit of support here on Apple. Well, guess what? Every bar was a selling bar except for one, and the volume was light. That's not what you want to see. So it looks like the potential for more downside on Apple seems a little likely. Maybe it bounces tomorrow. You never know. But I'm going to stay away from it. I'm going to let it do what it's going to do, which is to shake out some longs, and that's what it's doing right now. And those short sellers in Apple are really doing well, obviously. So just, if you are short Apple, enjoy it. If you're long, we've been talking about it for a while that you're looking for a rollover. Similarly, Google, I said over the weekend, I think you look at these prices right here, right now, and would you rather be a buyer or seller of Google? And it's got to be a seller. I don't necessarily think that means you sell short Google. I don't think that really makes sense because look at the trend. The trend is clearly higher. However, we're at a point where a lot is baked into the market. You have earnings coming up on Google. It sure looks like Google has priced in a lot of good news. So earnings, we're probably going to flatline into it, maybe sell off some profit taking. We'll just have to wait and see. But right here, right now, I just don't think that the risk reward is in your favor to the long side on these names. And I just believe that if you're looking for an opportunity, Apple may be there, but Google is not there right here, right now. Let's go back to the S&P, and we're seeing a double top here on the S&P, which is fine. We talked about it over the weekend. However, I think the S&P is still constructive on a monthly profile basis, and we're just going to stick with that. The NASDAQ, I believe, is the only one that's showing a negative rollover here, which means I'm looking at the point of control, and the point of control for last month was 28.45. What happened on Thursday? We gapped up towards that level and sold off. That was your opportunity to take a cheap shot to the short side. Now, Apple ended up outperforming to the downside, so if you were short Apple, that was the trade. However, I personally bought the Qs, and I bought put spreads on them, 69.5 by 69. Those are so far in the money now, it doesn't really matter. However, you just want to be careful from the short side because the 50-day moving average is creeping up. The 90-day point of control is right at these levels. Now, if we do break these levels, it could be a slippery slope in the Qs down another $2 or so. So I just think that's something that you want to be, keep in mind and realize. With that said, the Russell 2000, similar picture to the NASDAQ. Point of control from the prior month finishes at the top end of the range. This month starts, and now that point of control is resistance. That's a classic topping pattern, and I just want you to be aware of it. We are 20 points from what should be support on the Russell 2000. So we could have about 3% of potential downside on the Russell, and nothing would necessarily be wrong with it, just a little bit of a pullback. So I think the fact that we're into a new quarter, the elections are right around the corner, earnings are right around the corner, there's not a lot to look forward to in the market. And if you think it's the Fed stepping in with QE3, personally, I just think you're wrong. I think that the market has more worries, which is what, like I said, the election and earnings. And until we get that clarity, there's nothing that the market participants, the market makers, are going to find attractive. Now, with that said, I did find a name that actually looked pretty good today, and it doesn't look as good as it did earlier. However, Cliffs Natural Resource, and we'll look at it on a daily chart first. You have this huge high volume area here, and the bottom of it is right around this, call it 38 level. And where did we bounce today? The 38 level. So there's been a lot of volume here lately. You can see the huge volume spike, and now we're finding a higher low. I'm sure there's an argument for some sort of reverse head and shoulders pattern. However, I'm just looking at these recent lows and saying, okay, if we're looking for support, here's not a, this isn't a bad level, and especially on a pop of 6%. I caught it, 39.88 was my cost basis. I actually was trying to get it in the 39.70 range, and I had a limit, never got filled, and then I had to chase it, which is kind of frustrating. But this is a small position for me, just because Cliffs is something that can run, and you just want to be, aware of that. A level of interest is probably, well, obviously 41.88, which is the point of control for the year. However, I'm going to look a little more north of that and say around 43, 44 is my potential target for this. I do have some profits baked in, almost 2% now, which isn't too bad. Nothing to be happy about on a name like Cliffs. However, we're just going to kind of roll with it and see where it takes us. A name that I added to today was Coke. It didn't add a lot, about a fourth of a position, and this is a name that I've actually scaled down on some. Well, guess what? I scaled back, I increased my exposure. I think this is a name that can press higher, and I'm looking forward to do just that. Earnings coming up in a week or so, so just be mindful of that. Now, if it takes an earnings run, where it rallies into earnings, I'll probably do something like scale down on that fourth I bought today. That's just something that it's a risk management strategy, knowing that if Coke, for example, disappoints, or even if it, comes out with surprise earnings or whatever, the market sells off on it, or I should say Coke sells off on earnings, it could be an opportunity to get involved into Coke. So we'll just have to keep an eye on it over the next couple of days. My cost basis is not too much lower than right here, so it's not like I'm weighing the money here. I'm not. It's just kind of rolling with what the market's giving me right now, which isn't a whole lot. Silver pulled back today. Just be mindful of this. You don't want this to come in your face. I did mention over the weekend, I think, silver and gold are something that you can remain long. Just one thing to point out, we are at the top of this high volume area. We are selling off from it. Call it, a consolidation range. We're just seeing a sell-off on, right now we're lower than average volume, which isn't a bad thing. So let's just continue to be long silver, but be mindful that it could pull back and we may have to take some more profits. However, if you did look at my trading results for the month of September, I did take profits, I think 3 times on SLV from earlier in August, I believe, is when I bought it. I don't remember the exact date. So just kind of want to point that out. So gold, similar thing. Gold barely down today, so not a big deal. ConocoPhillips hanging in there. Sideways consolidation, dividend coming out, so I wouldn't be surprised to see a little bit of an underlying bid going into the dividend. I don't know when the X date was. This is just something I hold, so with, I think it has an upside bias. So I'll just leave it at that. Bristol Myers, I want to see this thing start to bounce. I have some short 34 puts that are still in the money, still working, still profitable. But if this thing doesn't start to turn soon, I'm going to be less interested in holding Bristol Myers, especially with earnings coming up in a couple weeks. Actually, expiration Fridays before that, so that's not too big of a deal. The euro selling off from, making a lower high here, not whatever. The dollar now bouncing off of its point of control, however, lower than average volume, so I won't put too much into it. Let's look at an hourly chart. Still below last month's point of control. Just keep that in mind. If it gets above that, gets above that and then gets above the 20-day, then I think you look for more upside on the dollar. And that's just kind of the way it's going right now. I would expect that means profit taking in the U.S. markets, so just don't overexpose yourself. Stem cells, STEM. This was a little speculative position that I bought maybe on the second or the third. It had a pop. I think I bought it on the second. Had a pop. I just moved my stop to break even, and guess what? It got hit today. Whatever. Going for, I was actually not going for a home run, but I was going for a nice gain here. It didn't happen, so I took my break even and I move on. And the last position that I own, there we go. Southern, nope, that's not it. There we go. Southern, having an underlying bid to it, long from the mid 45s, I believe. So this is in the money. Actually, I did take some off today, just a small position, just because I want to continue to raise cash, because I think there will be opportunity to be long other names with more outperformance, later on in the month maybe. So I just want to keep that in mind. Really, overall, I'm looking for more more downside in the market. I think it's important to realize that the markets go up and the markets go down, and then trying to look forward and see, okay, what does the market have to look forward to? And it's certainly, now that we're in the new quarter, it's the election, it's the fiscal cliff, it is earnings. Those three are on the front burner. I'm sorry, but QE, Europe, those are on the back burner. Europe and the Fed have done what they needed to do, but the market has already, it looks like it, and the way the market is reacting, it's acting like it's already baked in. So really a pullback, another 35 points in the S&P, not a big deal, probably a decent buying opportunity. Just kind of leaving it like that. Be opportunistic. Realize that there's two sides of the market. When the market's trending higher, be a bull. If a market's trending lower, be a bear. But look at those price levels, and we use volume profile here, which are the absolute best levels, and realize that at those important levels, you can shift your strategy and really take opportunity and take on some risk and get paid for doing it. So I hope you have a great night, and I will talk to you later.